My name is Simon Blaydes. I'm now in my third year as the chairman of the management board at Latvian Shipping, and the time really has flown by since I've been here. So I think Robert should have no trouble settling into life in Latvia, I think. I'm going to give you today a very brief overview of the business at Latvian Shipping and our most recent financial figures, which will be released tomorrow morning to the stock exchange. And in between, I'll touch a little bit on the business climate in general, particularly in the shipping market, and some views on the future prospects, really, of Latvian shipping as we go forward. Latvian Shipping is still one of the leading owners in the handy-size and medium-range market. And in fact, so if you look at the league table, we rank in about 9th position. But of course, it's a lot about interpretation and where you group ships, etc., etc. I could probably make us the top if I looked at a certain interpretation of that market. Our current fleet consists of about, exactly 18 ships, and that will soon be 17. I think we're going through a completion process on one vessel, the Kuldīga, which will be sold, hopefully, and completed next week. And those ships are now of an average age of about 6 years, which makes us a reasonably modern fleet when we talk about being the 9th biggest fleet in the world. And I should also emphasize, as I did last year, that Latvian Shipping certainly, it's not really a Latvian or a Baltic fleet, which many people are under the misimpression of Latvian Shipping being a very northern European Baltic fleet. In fact, the vessels trade all over the world. West Coast Africa, South America, a lot of them are doing business in Asia at the moment as well. And also a lot out of the Gulf. I mean, basically taking products from one place to another. In fact, very rarely do any of our ships actually come to Riga or indeed into Ventspils. And so to operate this fleet, we have roughly, as I see, 700 seagoing professionals on those 18 vessels. And obviously they have relief crews, and essentially 90% of those people are Latvians. Additionally, there's circa 55, 60 people based here in Riga that essentially administer that fleet for the various charterers of the ships. So from negotiating charter contracts and from organising the maintenance of the ships and dry dockings, which they have to complete every 4 or 5 years to keep them qualified as ships that are qualified to charter out. And then within that team of people, we have a management team of which I'm the chairman of 3 people. And all of those people have been involved in the shipping business for most of their career. And that management board reports to the Supervisory Council, which is chaired by Robert Kirkup, who's just introduced himself. So, for a business update, frankly, Latvian Shipping has been reasonably lucky to be involved in the product sector, the clean product sector mostly, as a distinction from the other sectors within the shipping industry. Dry bulk, very large crude carriers are still going through a nightmare scenario, as they have been doing since 2008. But at least in our sector, there's been some recent signs over the last 12 months of some recovery, and these signs are generally coming through in the rates that we're earning for the charter rates in the ships. And I say we've been quite fortunate. There's a lot of rumours and sort of signs of recovery throughout the various sectors, but actually the figures are showing that over the last 9 months particularly, that recovery seems to be on the way. Some of those, and you particularly see that in the spot market. Generally, there's 2 different types of market, the spot market and a time charter market. Most of our ships are out on time charter, but you'll see that on the sort of voyage by voyage charters that the rates have improved, not radically, but I mean sort of reasonably extremely. So, and those rates are certainly coming through in the time charter rates that we're actually sort of able to secure, and we have secured over the last 9 months this year. So the ones that have been renewed have gone up reasonably. And I'll show you a table later on in terms of the exact figures. And in fact, we do actually run 2 or 3 ships on spot ourselves, and we continue to do that because we're reasonably comfortable that we can actually charter those ships out and take some of the premium off the table that's there at the moment. Biggest achievement this year from a business update, I think, has been really the way that we've been able to negotiate with our banking syndicate, the major banking syndicate from who we borrowed $360 million 5 or 6 years ago. Over the last few years, we've been going through a nasty process with that bank about justifying the continuing support from that banking syndicate. A number of the covenants that we agreed with that banking syndicate when we first borrowed the cash, we unfortunately break every single year. And we have to go through a process of negotiating with 9 various German and Northern European banks, Scandinavian banks, to get their approval to continue their support. And essentially what we're doing is breaking a number of covenants which we were once upon a time able to meet. This year, we're on the verge, and I wouldn't announce it now if I wasn't fairly sure that we're going to be able to sign up to the deal, where they are going to change, rather than waive their covenants for the next year, they're actually going to change the terms of the deal that we're on so that we won't have to go through this process again. So it's sort of indicative of a sort of a strengthening of our balance sheet and of the operations of Latvian shipping, that the banks, our major suppliers of finance, are actually sort of supportive of that idea. And how have you managed to do this? Well, essentially, as I broached earlier, we've sort of sold 3 of our handy-sized vessels this year, which may seem a little bit strange, but essentially what we've done is managed to pay back a $75 million facility because of selling those 3 ships. Additionally, we have raised nearly $10 million in free cash, which has therefore been put together with some other cash we have on our balance sheet to fill one of the major black holes that we have on the horizon that was looming in Q3 of next year. I mean, if you're familiar with Latvian shipping, you'll know that we have one long-range vessel, which we sold and leased back about in 2009, I think it was, when the market was in a much better situation. That ship has been making losses, unfortunately, since 2011. And when we signed the sale and leaseback agreement, we agreed, previous management this was, unfortunately, to buy the ship back for quite a large sum. A reasonable sum at the time, but some $23 million. And that obligation kicks in Q3 in August of next year. And that obligation, I think, is about $23 million. So if you're familiar with the balance sheet, then you'll know that there's quite a large sum of cash for Latvian shipping to find going forward. Fortunately, we've managed to do a deal with the primary security providers behind that lease, and we will hopefully complete a deal with them over the next few weeks, whereby we accelerate that deal and pay back our obligation this year. So we will end up essentially buying back that ship. And as I mentioned, the 3 ships we've sold to raise the cash is going to be put together to fill that particular hole. Of course, we still need probably to sell the Riga, which is the long-range carrier in question, next year to pay back the primary lenders. So it all gets a little bit complicated. But essentially what we are in is a position where the banks are now very comfortable that our ongoing future cash flows now are quite sufficient to meet their obligations for the rest of the 16 ships in the fleet. And that will continue for the next 4 or 5 years, with hopefully no more adjustments required in this particular market. If you'd like to ask some questions to clarify any of those issues, then please feel free towards the end of this presentation. The shipping market update in general. There are signs, certainly, as I mentioned, that things are improving. Maersk, for example, have recently sort of called a bottom on the world trade market in terms of they've got one of the biggest fleets in most sectors in the shipping industry. And essentially, only a month ago or 2, they were calling September of this year as the bottom, as they saw it in the world trade situation, in terms of goods that transverse the oceans. How Latvian shipping's product sector fits in with that particular view is difficult to tell, really. But generally, I would predict that we will at the very least be underpinned by that global picture, or that macro picture. Last year, I was talking about a glut of deliveries in the product sector being behind us. Of course, there's a very supply and demand nature. More and more ships were coming into the market because they'd been ordered in happy times. That particular glut seemed to be over, although there are stories ongoing of more and more orders now taking place because the market is looking more attractive to be involved in. And you see this throughout the industry. So, arguably, the use of our products that we transport is going down on a global basis, but the distance that those products are traveling is seemingly going up. So we actually sort of see a demand increasing for our services. So with the tighter market, that should pan through to a tighter market and better rates that we want to earn. But it can get complicated. The new ships that are currently being ordered are generally of the eco or more economic types, and that will reflect certainly on the rates that a 6-year-old fleet, 7-year-old fleet, 8-year-old fleet can earn, and where the premiums will go in the future as the market does recover, hopefully, will be distinguished by which type of vessels we've got and the speed they need to carry and how old they are. So there are a lot of variables to take account, so it's not quite as smooth sailing as people would think. Numbers. If we look at the numbers, I think I was alluded to some good news. Obviously it's interpretation, but you can see our net income over there on the right-hand side in the bottom right has actually turned for the first time since I think Q1 of 2008 into a profit this year. So, but obviously that's sort of pre-exceptionals. You'll see that revenues have declined between 2012 and 2013 from 83 down to 78. And that really reflects, as I mentioned, the 2 vessels which have been sold this year. I mean, tempered by the increase in charter rates. So these factors really sort of, in addition to some savings on administrative costs, which we are still taking out of our income statement, have sort of resulted in a reasonable profit, I think, a fairly small profit of $4.4 million here versus 2012 last year. But I emphasize it is quite a small profit, but it's particularly, it should be pertinent to take account that we've actually charged about $20 million of depreciation before that profit figure, and also interest on the loans of about $12 million, so before we get to that profit figure. So we are generating a reasonable number to pay back our finances. But I will caveat all of this, of course, as you see, that my comments are pre-exceptionals. Unfortunately, we did, as people will be able to see tomorrow morning, have to charge in the first 2 quarters about $23 million of an impairment charge earlier on this year, and that was a direct result of the ships we had to sell. If the ships are sort of due to be sold, then we can't really value them on an in-use basis. We have to look at them on the basis of when they will be sold. And so there was a $23 million charge, unfortunately recognised because those ships were valued way higher than we could actually sell them for. And as I pointed out, we had to sell those ships so that we could cover the hole that was the vessel Riga that needs to be covered in Q3 next year. Future prospects. I think the concept of stabilisation is now really embedded in Latvian. I think now, especially with our agreement with the banks, that we've got a very stable foundation to go forward on. And with the continuing building of the high regard our ships are held in, we have a very qualified and well-vetted fleet. All the majors generally in the world are prepared to use the fleet, and they've vetted them and they qualify to be used by most of the major companies, which certainly wasn't the case 3 or 4 years ago. And that's been a sort of a real achievement by the ship management team in terms of the employees we've taken on to put the effort in to maintain those ships and sort of make sure that they are qualified to be used by all of the major brands in the world. However, to emphasize also the successful future of Latvian shipping, I must emphasize is really out of our hands. I think we've done most of what we can do from a company perspective, but the return of the world to global growth is going to be key, and the demand for oil products is going to be key to the future of Latvian shipping. And as long as major customers continue to demand high standards for their ships, then we should be reasonably well placed. Of course, we need to get into a position to start ordering new ships to replace the fleet and renew. I think that hopefully this time next year I'll be here to be able to update you on the prospects we hope to achieve in that respect. But I think that's still 12 months away at least before I've got some tangible news for you. Okay.